Welcome back. You're tuned in to Bazaar Morning Call. You're on CNBC-TV18. Well, Prakash Diwan, market expert, joins us on the show. Hi, Prakash. Good morning. Where are you at, Prakash? Mumbai, Goa, Europe? Where is it?
No. Very much at home. No worries. No Europe this time.
So home, that's Goa.
Yeah. That's
All right. You're missing the Mumbai rains. I don't know what's the weather condition out there.
We've got enough rains too. In fact, we've been having them since much earlier than Mumbai got it.
All right. Nice times. Evening tonic must be good. That said, Prakash, let's focus on a couple of stocks. Trent was a stock that was actually an outlier yesterday. Yeah. Yes, it was at around 8,000 rupees a few months ago. Then it corrected to around 5,000. But there has been some buying interest that's coming on. Now, we had an analyst meet yesterday. And a lot of brokerages that I read this morning are still quite optimistic on prospects of the company. And it's not a 8,000 rupee stock. It's a 5,700 rupee stock now. Your view from here on?
So, Nigel, while it's kind of set the retail segment on fire, it's probably going through a phase where there's consolidation happening. The store count is kind of, if you notice, it's not growing as rapidly as it did in, let's say, the last 24 months. And for the right reasons, of course. What they're probably doing is they're making sure that they don't get outwitted by the competition, which is also catching up big time, especially on the apparel garment segments. But my sense is that, this segment will probably throw up many more options. It has already given you 2-3 new names to look at. And that's precisely where capital allocation kind of gets a bit dilutive to just one name. It'll take time. It'll take time to regain its past glory, and you'll have to have some organic growth because the PE expansion was a bit too rapid, and now the earnings have to play catch up. So I'm not saying that it won't go back to previous levels, previous highs, but it'll be a while. It'll probably be a year and a half for that to kind of happen. Whereas, in the same space, if you look at how some of these other names have smartly kind of got their act together, especially Avenue, I think the kind of store expansion that is now getting into place, especially with UP being a big target area for them, there will be a very different, resetted metrics for them. And remember, you still have the geo retail overhang of sorts that, once that comes, things will be very disruptive in the listed space on retail. So till then, I think there is a lid on Trent. I wouldn't get too exuberant with that. But Avenue at these levels will probably start attracting a lot of money, is my sense. Though it's expensive, I normally have a bit of a concern with the valuation even there. But for various reasons, it probably proves to be a slightly better bet for growth from here on.
Now, Prakash, we've seen this almost $10 to $12 flare-up in oil prices, but I don't know if that really changes anything on ground in terms of how you should look at OMCs. For instance, if someone's owning IOC, BPCL and HPCL, is there any reason to sell? Would you take any trade on the upside or on the downside? Upside, maybe ONGC, Oil India. Any oil and gas trade based on what's going on?
So I think Surabhi, very clearly, the way oil has behaved in spite of so much happening around itself, very clearly tells you that there's not much of an impulse for oil to see newer highs or, certainly dramatic moves on the upside. In fact, if you own OMCs or if you don't own any of the OMCs, it's time to probably buy into these at lower levels because of this kind of sentiment. But my sense is globally, oil is not going to, shoot up the way we kind of saw in earlier instances where there were a lot of skirmishes, that geopolitical issues that led to that. In this case, I would actually believe oil would kind of be coming down pretty rapidly once things ease out. And things could ease out any time. They could either, because we don't know the end game of this whole conflict that's kind of emerged between Israel and Iran. But somewhere, oil will probably, peak out and start kind of going back to those 65 zones. So when that happens, you'll probably see a comeback. So I wouldn't buy an ONGC just on the basis of this. But definitely, I would short any of these companies either. But if you had to buy, you'd probably buy the OMCs because they have a fair amount of padding in terms of where they can get some revenues even from a domestic perspective. So any of the OMC, a basket approach, whatever you like, would make sense. But yeah, there's no shorting that's definitely at this point recommended, and or going long on ONGC either.
Prakash, Tata Technologies and Volvo, they have strengthened their partnership for future mobility solutions. I recall when the stock listed, there was so much of excitement. It went bazooka one way. From 1,300, now you're getting the stock at around 730. And in that period, I think the last 1 month or so, we did have, a large trade that took place as well. At 7:30, are you interested or not?
So, as a matter of disclosure, I do have some exposure to this name. And as you rightly said, from the stratospheric highs of 1400, it's probably available at a level where there's not much to lose. The risk reward is definitely favorable. Now, how deep this tie-up is in terms of visibility of earnings and scale, that we'll have to, of course, wait to see. But given the fact that the space that it is in, Nigel, you're not paying kind of a price that's too steep. I mean, this is the same thing that happened to some of the other technology-based companies like Tata Elxsi itself, and they started kind of phasing into a scale which was very promising. So I would believe that you'll have to have a slightly long-term approach on that. I don't have any views on this particular announcement because I didn't expect this. This has just come out of the blue. But given their expertise, the focus that they have, I think it's poised for a repair, which will definitely be very positive. I'm not again saying that 1400 is coming soon, but organically from these levels, there's not much to lose. It's a very favorable risk reward, is what I believe.
Favorable risk reward. So we'll see how this one goes. I think we're just, a minute away from the pre-open session, and we'll get the first rate starting to come through in a short while from now. So, the other thing, of course, yesterday was IndusInd Bank, which was the top nifty gainer with about a 4-5% kind of a pop. That Nomura note, I guess some bottom fishing and people trying to figure out whether there is a value here. Any thoughts, Prakash, on the price action?
No, people seem to have reconciled to the fact that there's not much of a downside risk at these levels. But the bank will have to do much more to kind of, get back in the reckoning, Prashant, especially when you look at from where it's come off. It's a long haul. So, it'll probably stabilize somewhere, once the appetite for the early adapters or the risk takers is done. In my sense, it'll probably go through a slightly longer time correction and a consolidation before it kind of starts getting into more fireworks. But yeah, I mean, general perception is that khone ko kuch nahi hai. This is a level where everything's kind of priced in and only repair will help. So from that perspective, yes, but it's not something which is a delight to buy into because there's no visibility of how things will pan out. So you have far better options in the banking space. Why look at something which still has such a lot of indecisiveness around the growth itself?
Prakash, for the last week or so, we're making this point. Hindustan Zinc at 500 rupees odd. There's a temptation from the government or from Vedanta. Vedanta times it perfectly. They've taken money off the table. Large block got done yesterday, 1.5% odd. What's your view on Hindustan Zinc first? And, what about the view on Vedanta? Because, the stock appears well placed, but it's still in that 450, 480 kind of band. Your take on both these two names?
So let me explain what I feel about Vedanta, and the view is positive because sum of parts itself gives you the rationale that Hindustan Zinc at about 180,000 crores didn't make sense for it to be kind of priced into the Vedanta stock. In the sense, it should have been much more. So the Vedanta stock, once the demerger starts getting defined and people will be in a position to calculate depending on the ratios and all, you'll probably see that there's lots that's still left on the table. Secondly, the underlying businesses that Vedanta has, all of them are probably reaching a stage where they are fairly promising in terms of where they could go from here on once the demerger happens. So that's very clear that Vedanta, especially the dividend propensity to pay out such high dividends, is something which makes the dividend yield so attractive. So I'm saying if you have a 1 year plus kind of a view, Vedanta probably offers a lot of value in terms of this value unlocking process that's going to begin. On Hindustan Zinc, I think it's done with the expansion that they're talking about. They've spoken about expansion on all the metals, and you'll have to now wait for the capex to start kind of turning. So you'll see a subdued ROE kind of a profile for some time, at least in the next 12-18 months. And then probably you'll start kind of getting into the reckoning. But, it'll probably give you the opportunity to buy at lower levels where things actually are not bad, but it's just because the sentiment and the technical factors that you are seeing that being available at lower valuations. But Vedanta is the one that probably will start attracting more attention going forward. Hindustan Zinc will go on the side burner for some time, at least after this event is taken place.
All right, Prakash, thanks very much for that. Good speaking with you. Appreciate it very much here on
Thank you.
CNBC TV 18. Thank you.